Welcome back, everyone, to the weekly update for week 46. And this week, starting, well, Saturday, I guess, so at the end of this week, we have the major news, which is the beginnings of a bit of a geopolitical mess here. And so I'll get into that and a few other things I've seen this week. Okay, so for those of you who don't know what happened, there was a drone attack in Saudi Arabia, which led to the shutdown of half of their oil production, or 5.7 million barrels, which is approximately slightly less than half of the US production. It's a big deal. It's 5% of uh, the world. And so that seems like a huge deal, and small uh, things like this in the past, percentage-wise, have sometimes meant huge price spikes. Now, the reason why I don't think it's going to be as huge this time, that's not to say it won't be significant and won't cause a whole number of things, but the reason I don't think it's that huge this time is A, the market was already oversupplied. B, there's maybe 3 million, maybe slightly more, barrels per day in spare capacity. That's more than half of what was shut down. C, we don't know how long the outage is going to last. And D, there is already seemingly concern, and countries have strategic reserves for reasons like this. And so those may be accessed if things get bad. But either way, um, there's a lot going on here, and we don't know if things will escalate further, get worse, if there's going to be more attacks, if there's going to be retaliation, what? We don't know. This leads me to the knock-on effects of this, which are numerous and create even more of a mess, because we have first, we have inflation. Now, to those of you who don't know, the primary indicator or component of inflation is energy prices. So if energy prices go up, it looks like inflation goes up, which means that the Fed, in theory, would be more reluctant to cut rates or maybe even raise rates if there's inflation. That's the purpose. However, right now we are heading towards a time when the whole market essentially is expecting the Fed to cut rates, despite there already, prior to this attack, being more inflation than they normally do and more positive market signs than they normally have when they cut rates. So we'll have to see where that goes. And at the same time, you have to answer all of these questions geopolitically of, well, who buys Saudi oil? Where do they get oil from now? And the answer is China buys a lot of it. And will they have to pay more? Well, it's a commodity market, so it's likely everyone will, at least a bit. And then you have to think, well, what happens to the shipping routes? If the oil needs to come from, I don't know, Russia instead of China, instead of Saudi. Well, does that certainly changes things, but does it make it better or worse for the shipping companies, that is? So there's a lot of things transport-wise that need answering. And also, how does this sudden inflation or stagflation, if you want to call it, buying in depending on the economy, how does that hurt different economies and their currencies? There's a lot of mess that has to be answered. So I'll get to the other half of this later. But in the past few weeks, gold, along with bonds, have pulled back significantly. Now, is this due to trade wars? I don't know. Is it due to a change in sentiment about the economy? Maybe. Um, but the point is, gold and silver, which were very overbought, both, and both were kind of surging. They pulled back, and one could argue that they broke their uptrend line. We'll have to see if that plays out or not, but there's a lot of volatility in these things and these equities, even more volatility. So we'll have to see where that goes. I don't really have much more to say about uranium this week, other than the price seems to be moving without going anywhere in terms of if you're watching well, the bid and ask, they're moving around, just going up, going down, but at the end of the day, it's approximately where it was before. But the activity is interesting to note. So, due to everything that's happening in Saudi Arabia and that could progress from there or not, I think you, I'm throwing out my old playbook in oil. Now, what I thought was going to happen now may still happen, but I have no idea if it will. So my old playbook's out. I'm trying to, at this point, watch and see what the market says is going to happen and just look at different factors and try and make a judgment call um, once we see what happens. So I know there's a lot of calls for a recession recently. I don't think I've called for one, but I no, I don't think I've ever said one. I've responded to a few people who have said, "What if there's a recession?" Well, I said, "If there's a recession." Anyway, that doesn't matter. The point is, for this slide, Stanley Druckenmiller, who's a famous investor and very, very smart individual, has once said something like the greatest indicator of economic health that he knows is the inside of the stock market. So when I look at the inside of the stock market, I'm seeing an interesting picture. I look at cyclicals and they seem to be trying to form a bottom, maybe trying to go up, or having a steep counter trend rally. Look at bond yields. They're going up very quickly. Now, I know that when a recession actually starts, the yield curve comes out of inversion and actually steepens a lot, pricing in future economic growth. But and Fed cuts, of course. But my point is, the bond yields also go up for growth. So I don't know if this is a counter trend rally, but as I mentioned last week, the certain things started doing funny things that you wouldn't expect if we were heading into a recession. You look at copper, industrial metals, cyclicals, they all kind of in unison rounded a bottom or rounded a potential bottom, I should say, and started to try to reverse. Now, if the dollar was weaker, I would think that the dollar has pulled off the highs definitely, but if it were weaker, I would be thinking that maybe the boom could continue. Um, but we'll have to see where this goes. Could just be a counter trend rally, could be nothing. But I just found it interesting and thought some of you might. Okay, and on shipping. Recently, we've been adding to the shipping positions, and I think it's important to point out that there's a number of different kinds and pricings for shipping. And so the oil ordeal could cause quite a mess. Now, I don't know if that will be a good mess or a bad mess. And by a good mess, I mean the type of mess that makes ships have to travel further and move more or slower or take alternate routes requiring essentially more demand, or bad mess in terms of less demand. So we'll see how that shakes out. But that's just one aspect of many types of shipping. So lastly, my least favorite part. of these videos in that the picks. So firstly, we have a uranium pick, and basically it could be the point of this pick is uranium. The pick itself is Bannerman because that's one that has a good mix of defined project, safe amount of cash, and good management, and basically all around safe uranium play. Now we're a bit overweight in this portfolio, but this portfolio is, you know, weekly ads. So that's the uranium play. In terms of something else, now we could go into the theme of maybe the economy's getting better and go into something like Lucara, but I decided that I thought something else was more interesting. Now, recently, a few months ago, the Mosaic company announced that they were shutting down one of their mines, and they mine potash, which is an ag chemical. And then recently, there was news that Nutrien, another big ag miner, was shutting down production temporarily at some of their potash facilities. So I thought that was very interesting um, because even though the price is much higher than it was, it seems to be not high enough for the big players. Now, Verde has a very interesting and very different cost structure to those other players and a different product also slightly. Now, um, their product pricing is based off of the pricing of potassium chloride, which is potash. They base it on the potassium content. But basically, if the big boys get their prices to go up, that should also benefit the pricing for Verde. At the same time, Verde it would be profitable, quite profitable at these prices, and it's more of a can they ramp up story. So it's a different play, but it's still in the process of de-risking itself, and it's a very interesting story. I suggest anyone who finds what I'm saying either confusing or interesting has a look at the space. And there's not that many players in it. And that was a lot about that. But the third pick is basically Ginkgo, shipping, that is. And we started buying this a while ago. And I really don't like chasing. But at the same time, when the restrictions are a weekly thing, and I know I could have been buying a lot more this whole time and haven't, probably maybe should have been, maybe shouldn't. We'll see. But the point is, when you're only adding weekly, it becomes difficult to size positions properly. And we have very insignificant positions in the portfolio in shipping. I don't know if it's necessarily a buy right now, right here. It did move a lot recently. I don't really like chasing, but that in a nutshell is my whole problem with this picks part. But it's the pick for this week. That's it for today. Thanks for watching and making it through all the rambling. And I hope you found something interesting, and I hope I have time to do a mid-weekly or two video. Been working a lot recently. My portfolio is thankful, but my sleep schedule is less so. But with that, I will wish everyone a great day and good luck in the markets. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.